All right, good evening everybody and welcome back to Walks and Wall Street. Today is a very rainy day in New York. It is October 20th, 2023. It's about 9:08 p.m. Eastern Time. We are live from Midtown Manhattan in New York City. Now before we get started, I think it would be appropriate just to do a quick recap of all of the major events that went on this week, because it was a very busy week on Wall Street, particularly because we heard from Federal Reserve Chairman Jerome Powell as he gave a speech yesterday at the Economic Club of New York. But also, I would say more importantly, we are officially now in the full swing of earnings season. So what does that mean? Well, as a quick review, earnings season always starts off with the major financial companies reporting earnings, particularly the big investment banks, the fintech companies, and the big credit card issuers. If you've tuned into Walks and Wall Street throughout the week, we've done deep dives into pretty much every single major bank who has reported their financial results, from Bank of America, JP Morgan Chase, Citi, Goldman Sachs, and the like. But also, in addition to that, we have had some major credit card issuers report, such as Discover.org, and today, before the bell, we had American Express reporting earnings. Now, AMEX actually did beat on both the top and the bottom line. We're going to be doing a deep dive into American Express earnings report today. We're going to be talking about some of the bright spots in the earnings report, but we are also going to be talking about some areas for concern. As a quick review, I think the major commonality across the board of all of the major banks who issue credit cards is that default rates are slowly but surely creeping up, particularly as it relates to 30-day and 90-day default rates. So if you look in the chat, I'm actually going to drop the link to the investor deck, or I should say the investor presentation for American Express Q3 earnings conference call. So if you want to follow along with us, just look in the chat for my name that's highlighted, Walks on Wall Street, and click on the link, and that is going to take you to the PDF. I'd advise strongly just take a quick look at it. You don't have to spend an hour, 2 hours on it, but I think it's appropriate just to quickly take a look. I'll tell you my high-level overview thoughts. We've noticed this trend not only at Bank of America, JP Morgan Chase, but now also at American Express and Discover. So take a look at the line item that says provisions for credit losses, if you want to follow along. So for American Express, provisions for credit losses came in at $1.23 billion. If you look at the same quarter a year ago, it was about $778 million. So what do all these fancy words mean? What does provisions for credit losses mean? Well, in layman terms, it pretty much just means more money put aside to cover customer defaults, particularly on credit cards, right? So as we've been seeing a lot of consumers work their way through a lot of the pandemic savings, we're starting to see delinquency and default rates start to trend back to pre-pandemic levels, which again, if you look at the investor deck and also if you look at the deck for Bank of America's earnings, they're using pre-pandemic as Q4 of 2019. Right? So we're starting to see this trend in the wrong direction. I should say a return to normal, if you will. Is this a cause for concern? Could this be bigger things brewing? I don't know. I would say maybe. I think we're going to trend slightly higher than pre-pandemic levels, particularly at some of the major credit card issuers. Hold on one second. But I think this is important to pay attention to. There's very smart people who work for these banks. There's very smart people who work for these credit card issuers. And as they continue to put more money aside to cover customer defaults, I think that is something we all need to be paying attention to. Now, a bright spot, as we've been talking about population growth, particularly here or I should say demographic trends and population growth across the globe, we continue to see extreme strength in consumer spending in the millennial and Gen Z cohort. So according to American Express, if you take all of their revenue and all of their credit card spend, Gen Z and millennials are the fastest growing customer base in terms of spending, with spending up 18% year over year. So consumers are still spending, and most importantly, millennials and Gen Z is still spending, obviously because unemployment is still relatively low. So we'll do a little bit of a deep dive in AMEX earnings report later. But just again, a high-level overview of some of the major events that happened this week. We also heard from the National Association of Realtors as they released their existing home sales. Existing home sales fell 2% month over month and 15.4% year over year. We've talked about why, particularly as it relates to order of liquidity. Generally speaking, the assets that are more liquid, they're more rate sensitive and they reprice faster. That's why we gave that example of stocks tend to reprice a lot faster than real estate, and interest rate hikes take a lot longer to impact the valuations of not only residential property, but commercial, particularly office and multifamily. Let's take a look at crude oil. Crude oil closed the week at $88 a barrel. Obviously, everything that's been going on in the Middle East, it's absolutely horrible. We had a little bit of a pop in crude oil because Saudi Arabia claims that should these bombardments of Gaza not stop, they're going to cut oil production. We'll keep our eye on that. Extreme bond market volatility plagued Wall Street this week. For a brief moment in time yesterday, the 10-year U.S. Treasury yield, which is commonly known as the benchmark, was yielding 5% for a very short amount of time. However, as of today's close, bond markets actually caught a little bit of a bid. There was some buying in the bond market, yields came down across the curve, and the US 10-year is trading around 4.9%. If you look a little bit further out on the longer end of the curve, the US 20-year is over 5%, 5.2%, and the 30-year is just at 5% even. A 30-year fixed-rate mortgage in the United States of America hit a record high not yet seen, or I should say haven't seen since 2007, during the Great Financial Crisis. 30-year fixed-rate mortgage across the board in terms of the average rate hit 8%, 8.01% to be precise, according to Bankrate.com and according to CNBC. Now that we've talked about interest rates and the yield curve, I think it's appropriate to give a little bit of an outlook on what could be happening down the pike because, guess what? The next FOMC meeting, which stands for Federal Open Market Committee meeting, will be going on October 31st through November 1st. As a little bit of review, the Fed funds rate currently stands at 5.25% to 5.5%. That is the target range. Now, futures markets are pricing in another pause. However, if I had to go out on a limb, I think we are going to get one more interest rate hike by the end of the year, either at the next FOMC meeting, which is going to be on November 1st, or the one that we are going to get right before the end of the year. So just as some quick announcements there, we need to be on the lookout for that. That's all I have for you all as the sort of recap. For those of you who are new here, and if you tend to miss the live streams, you can't sit through the whole 2-hour live stream. If you scan the QR code on your screen and punch in your email address, every other Thursday after the market closes, so once that closing bell rings every other Thursday, I will send you all of my research compiled for free. The newsletter covers global equity markets, fixed income, the housing market, specifically to New York and Miami, but across the country. So you do not want to miss that, particularly if you want to stay in the loop, and it's a great free way to support the stream. So go ahead, scan the QR code, punch in your email address, and you will be able to have access to all of my equity research for free. Lastly, everybody, before we get started, and I say hello to everybody in the chat, let's take a look at equities, okay? Because this is very important because stock markets got absolutely freaking clocked today. S&P 500 down 53 points, or about 1.26%, closing the week at the dead low of the week, 4,243 on the SPX. Let's look at the Dow Jones Industrial Average, or the Dow 30. The worst performing stock of the Dow today was American Express after that earnings report. The Dow was down 286 points today, closing at the dead low of the week, 33,127 on the Dow. Last but not least, the NDX, or the NDX, the NASDAQ 100, which encompasses tons of high beta growth stocks, was down 222 points, or about 1.5% on the day, breaking back below its 50-day moving average and coming up on its 200-day, which sits at 13,843. The NASDAQ 100 closed the week of trading at 14,560. All right, so I'm going to go ahead and close up the laptop, everybody. We'll say hello to everybody in the chat, and we will get started. I want to wish everybody a wonderful, wonderful Friday afternoon, and I'm wishing all of the Walks on Wall Street viewers out there from across the globe a successful and restful weekend. So give me a minute, and we will get started. Okay. Now, I have my umbrella with me, but it just stopped raining. So let me go ahead and close that up. But for For those of you who are just joining, again, if you scan the QR code, punch in your email address, you will receive all of my research for free every other Thursday, and you will stay informed. So I will close up the umbrella because I have a massive monstrous umbrella here, which I don't think I'm going to need today because it just stopped raining, which is actually very lucky for me. I've been walking around in the rain all day today. So yeah, cool. Let's see who we got. Let me scroll to the top. I see Noah is here, Jafet Perez, Richard Vogel, British Gray from Tampa, Florida, Carol Reevy. What's up, Carol? Good to see you. Happy Friday. Philip is here, says love this. Thank you, Philip. Michael J. Stevie C says you're back. Yeah, Stevie C, we're back in New York. Susan Wolin says evening, Tom and everybody. Mark T is here. Sharon, the 79FH Frank. What is going on, Frank? Good to see you. Our good friend John Casey is here. Nancy Segura says hello from Dallas, Texas. Nancy, good to see you. Oh, guys, I spoke too soon. I literally spoke too soon. It's raining again, so let's go ahead and bang open this umbrella. Let's be on our way. All right, who else we got? Hey, Will, what's up? Good to see you. Rob M says great to see you back on your walks. Thank you, Rob. Yeah, I had a really good time in Florida. I was in Miami for about 2 weeks. Beautiful weather, bright blue skies, sunshine every day, about 88 degrees almost every day that I was in Miami. But it's good to be back in New York. I'm happy I'm back. It's raining. And earlier today, though, if you watched the live stream when we did our Sutton Place tour a little bit earlier today, I mean, my God, was it downpouring. It was crazy. This is the 7th weekend in a row in New York City that it's raining. It seems like it rains almost every weekend. So, hey, Destructionist is here. What's up? I see Matt says, good evening, Tom and everybody. Happy Friday. Thanks, Matt. Teresa Diaz, Roman Johnson, welcome. Juan Fernandez from Miami. Raleigh Hikers here. Bree Grams. We got a full house. Colton Manning, Nathan Hayes. It's good to see everybody. Bradley Filler. Welcome, welcome. So if you remember correctly from last night's stream, we were trying, or at least attempting, it was definitely a failed attempt, to walk all the way down to Astor Place to see the new Wegmans. We are gonna do that tonight, no questions asked. So I'm gonna bang a left here on 5th Avenue, no distractions tonight, and we are going to be resolute, to steal a word out of Fed Chair Jerome Powell's vocabulary, in our pursuit to going to Wegmans tonight. You know, Fed Chair Jerome Powell was here in New York yesterday speaking at the Economic Club of New York. And he said, we are going to be absolutely resolute as it relates to bringing inflation back down to our 2% target. So tonight on Walks on Wall Street, we are going to be absolutely resolute in our pursuit to go into Astor Place and checking out the new Wegmans. Yeah, Western Mass Dave says Wegmans are bust. I'm really excited about it. And I was thinking about this when I was at the office. And I was sitting down, I'm like, am I getting old, guys? Like, seriously, am I getting old because I'm excited about a grocery store? I think I'm getting old. I think I'm getting a little bit older, but that's all right. You know, I think back to when I was a kid. Never in a million years would I be excited jumping up and down for a grocery store, but hey, whatever. Esmeralda says, what's up, Tom and friends? Happy Friday. Thanks for joining us. I see Abdullah is here. Abdullah, good to see you. Hey, Mark, what's up? I know, Bree Graham says we got to be resolute t-shirts. All right, I know I said no distractions, but this building is just too gorgeous. This is the University Club here in New York City. I know, Natasha Pieces, that's hilarious, isn't it? Anyway. So the University Club, I mean, the inside is just really stunning. I looked it up online. There's no filming allowed, but if you go to Google Images and you just type in University Club New York City, there are some images of it on Google Images. And the way I can describe it, if you've ever been to the Morgan Library Museum, it kind of looks like that. Maybe we should cross the street to avoid this. You guys could see the scaffolding going up in real time. This is right across the street from the gorgeous St. Thomas Church. Hey, Manny Explores. What's up? Good to see you. We're going to be heading down to Wegmans tonight. Yeah, Renee B, I saw that. I was excited. Yeah, the internet connection was no good inside. I don't think we'll be able to go inside the Wegmans, but we'll take a look at what it looks like from the outside. Now, for those of you who don't know, that used to be an old Kmart that closed down, went out of business. Now, it's not raining so hard, so the city actually kind of looks nice. I know, yeah. I'm seeing a lot of comments about, how is the store closures at a lot of these big box retailers, especially Target, going to affect corporate earnings? Well, it's already impacted earnings, particularly at Target, ticker symbol TGT. So I believe we talked about this yesterday or maybe the day before, but the Target in East Harlem, I think it was on 116th Street. It's going out of business. It's closing. They're shuttering the stores because they've been ravaged by shoplifters so much. It's been crazy. And I think that's going to continue to happen unless the city government or the police start to crack down on that crime. And as I've explained yesterday, I think it's very easy to do, in my opinion. Because if you look at the crime stats, it's actually not too big of a deal. And I'll sort of explain what I mean. We talked about it yesterday, but I think it's appropriate to talk about it again. But it's not as widespread as you may think in terms of the shoplifting and the fraud. It's a very select few organized group of individuals who are doing the lion's share of the crime. Over 90% of all the theft, in terms of shoplifting, retail theft, happens from quite literally like 250 people. They're organized retail crime rings, and what they do is they steal a lot of these products from the stores. They either sell them online through like eBay, Amazon, things like that, or I've even seen them just sell it on the side of the road. So if the NYPD can just crack down on those individuals, problem solved. And it's unfortunate, as we pass St. Patrick's Cathedral here, because the vast majority of people in these communities are just great, fantastic, hardworking New Yorkers that are just trying to go to the Target to get things for their families. But you have these unfortunate individuals who live amongst the community who ruin it for everybody, and now they have no Target to go to. So, but it's not just New York City, right? It's not just New York. It's major cities across the country, places like San Francisco and the like. So, not to sound like I'm singling out New York, but I've been seeing a lot of chats in the comments, and yeah, it's definitely a big issue for sure. Yeah, that's true. Frank's is Seattle as well. Agreed. Hey, Mike and Lizzie says, hey Tom, I'm trying to learn about index funds, mutual funds, etc. Honestly, I don't know much about it, but I'm interested in learning about it. I'll recommend an interesting book that I think you should read.
I think both of us together was...
And the book is by John Bogle, or Jack Bogle is his nickname. And the book is called Common Sense Investing. Common Sense Investing by Jack Bogle. So Jack Bogle is the founder, or was. He unfortunately passed away. I think it was 2 years ago he passed away. He was the founder and CEO of Vanguard Group. Vanguard is a massive, massive investment company. Absolutely massive. And Jack Bogle is really the person who pioneered taking on Wall Street head on and reducing management fees across the board. And I'm sure many viewers who are in the chat, so many chatters, could sort of resonate with what I'm about to say. If you look back to even the 80s and the 90s, right, the 1980s and 1990s, chances are if you wanted to purchase a mutual fund or something like that, the fees were so egregious that it really impacted your returns. So there was something called load fees, LOAD, load fees. And oftentimes you'd have to pay a 5% front load fee and a 5% back end fee. And per annum you would pay about a 2% management fee, so about 200 basis points a year. And that's just really, really egregious. And that it's independent of the performance of the fund. So really the only people who were making a lot of money on Wall Street were the fund managers and these mutual fund managers who were making so much money in fee income. So John Bogle, he sort of noticed this. He's like, you know what? The only people making money on the street are the managers, right? The mutual fund managers that are charging 5% on the front end, 5% on the back end, and 2% per annum. And if you look at the data, the vast majority of hedge fund managers and mutual fund managers on Wall Street fail to beat the performance of the S&P 500. So he's like, what if we create an ETF or an index fund that merely just tracks the performance of the S&P 500 and we cut all the fees almost to zero? And that's essentially what he did. And fast forward, 20, 30, 40, 50 years, or 20, 30, 40 years, well, guess what? Now there's even products on Wall Street that are index funds that have no expense ratio. They're free. I believe Fido or Fidelity has a product that's an S&P 500 index fund that has no management fees at all. So if you read that book, it's called Common Sense Investing. It's a very, very short read. You could probably read it in 4 hours over the weekend. And it explains the history of the mutual fund industry, the hedge fund industry on Wall Street. Now we're here at the Diamond District. You can kind of tell you're at the Diamond District because you have these two pretty big diamonds here that sort of mark the start of the very famous New York City Diamond District that's just right off 5th Avenue. But yeah, I'd check out that book. It's an awesome book. And essentially, you just gotta avoid fees. The more you can avoid management fees and keep your expense ratios very low, the better. Now, I can't give out financial advice. I'm not licensed or registered to do so, but I can say this. I would say if you're watching this live stream and you're over the age of 40, what I would do, okay, because chances are if you're watching this broadcast and you're over the age of 40, you probably have a job, right? You're probably employed, and you probably are signed up for the employer-sponsored 401k or IRA, something like that. The reason why I say over 40 is because you've probably been contributing to your 401k for quite some time, which is good. You should be doing that. That's really good. But the vast majority of people have no idea what they're actually investing in their 401k. And a lot of those older products in 401ks could be these very, very old target date funds that have very, very high management fees. So I would sit down with the financial advisor or do it yourself. Call up whoever your custodian is. Maybe it's T. Rowe Price, maybe it's Fidelity, maybe it's Vanguard, maybe it's Charles Schwab. Call them up and ask them, what am I invested in my 401k? And ask them to tell you what the expense ratios are on your funds. And if it's over 1.5%, you got to change it up. You shouldn't be paying 150 basis points a year anymore. You should be able to keep your fees under 1%. So that's what I would do. If you have time, one weekend, sit down with yourself or your spouse and really, really make sure that your money isn't in a fund that has an expense ratio in excess of 1.5%, right? Because these big investment managers aren't going to, call you up and say, hey, Jim, hey, Sally, hey, Western Mass Dave, did you know that, we're charging you 4% per annum in management fees for your 401k? We're going to move you to something a little bit less expensive, maybe 100 basis points a year. No, they're not going to do that. So you have to take that into your own hands and do it yourself. And I think you should. Because if you go to a compound interest calculator, and if you could reduce your fees by 2% a year, that's a lot of money. That could potentially be hundreds of thousands of dollars by the time you retire. So that's what I would do. All right. Team, check this out. I think we talked about this last night. This is East 43rd Street. And look at that. This new development that's going up actually looks like the same windows at 130 William in Lower Manhattan. I'm very, very interested to see what that construction project is going to look like once it's complete. Love the windows there. Hey, Veronica says thank you for the tip. No problem. Yeah, it's always good just to regroup with your financial advisor, once a year, because a lot of, especially older people that are nearing retirement, you just have been contributing to your 401k and probably don't know what you're invested in. You should be contributing to your 401k, right? But you just got to make sure that you're not paying into some crazy mutual fund or target date fund that's charging you 4% a year, because that's like from the 1980s. There's products now that are like 1% a year. That's what you should be paying, even a little bit less. So that's what I would say. Hey, Brian, what's up? Brian Reed says, good evening, sir. Thank you so much. Joseph Hardaway, good to see you. Thanks for accompanying us to Wegmans tonight. I appreciate that. Connie is joining us. Welcome, Connie. Feels very muggy out. Feels very, very humid and sticky out tonight. Hey, thank you for watching from Ecuador. Appreciate that. Good to see all of our Ecuadorian viewers. Thanks so much. All right, we got 3 seconds. I think we'll make it. I think we'll just make it. Guys, look at this in the distance. That's the Chrysler building. Looks pretty nice. Hey, Will says, hey Tom, what's your opinion on investing in an S&P 500 index fund? Yeah, so that, I mean, if you take a look at that book, that's exactly what it is, right? So generally speaking, if you don't have time to actively manage a portfolio yourself, and you're just focusing on work, and you don't have time to, pick individual stocks, then yes, I would just index the entire thing. Well, I can't tell you what to do. I'm not an advisor. But generally speaking, if you look at the data, the vast majority of actively managed funds do not beat the index. So if you could just own the index at a very, very low expense ratio, I think it's great. I think that's really, really good. Now, speaking of titans on Wall Street, ooh, disgusting. Here we have the Stephen Schwarzman building at the New York Public Library. Just an amazing, amazing building here. And right behind the New York Public Library, you have the Bank of America Tower right here. Let's cross, we'll get a little bit closer to the Lions. Juan Fernandez, is the Stephen Schwarzman book any good? Yeah, it's fantastic. I would highly, highly recommend the book by Stephen Schwarzman. It's sort of like a biography on his life. I believe it's called What It Takes. It's a very good book, particularly if you're looking to work on Wall Street and you want to get into the real estate business. That is like a must-read book, What It Takes by Stephen Schwarzman. Now, Stephen Schwarzman made the majority of his money through leverage buyout deals, or LBOs. And yeah, he's a Wall Street legend. He has a really nice house, I think in Great Neck, somewhere on the North Shore. Now, here's a little tip. Since we've been talking a lot about the financial markets tonight, we do have a lot of new people here. If you ever come to New York, particularly on the corner of West 40th Street and 5th Avenue, okay, so come to the corner of West 40th and 5th. You're going to turn east and you're going to walk right through these doors. This is the brand new New York Public Library. You're going to walk all the way to the back and take the elevators to the 5th floor. Now, the 5th floor is the International Business Center, and you have access for free to the Bloomberg terminals. I'm sure if you've ever worked on Wall Street or at a big consulting firm, you've probably utilized a Bloomberg terminal before, which is a very, very expensive piece of financial software. Each license goes for about $2,500 a month. Now, there's so many amazing free resources here in the New York Public Library system that almost nobody takes advantage of because they don't know about it. So take advantage of it. Go to the 5th floor. You could even take classes on how to use the Bloomberg terminals for free. So check it out. Yeah, Panda Express is also a really nice public rooftop. There is, it's really, really nice. Particularly during the summers. Now, I gotta tell you guys something, not to get political, so everybody just settle down, but I gotta tell you just the most absolute ridiculous story, okay? So during the pandemic, that library was still open, and the roof deck was still open. And I would go there from time to time, right? Because I was going insane, sitting in my little studio apartment. So I would actually work from the rooftop of the New York Public Library. And every 2 seconds, the security guards would come around and harass the hell out of you, saying, oh, guess what? You have to wear the mask. I'm like, we're outside. We're outside on a roof deck. So I got kicked out because, like, what am I going to be on a conference call and have my mask on outside? I'm going to lose all my accounts. I'm not going to make any money. So That's just a little bit of a rewind to all of the ridiculousness that went on. They would enforce a mask policy outside on a roof deck. All right, we'll move on. But I just thought that was, every time I walk past there, I'm like, I remember that. And they would be so Gestapo about it. You know what? On 37th Street, let's actually cross to the left. Because once we get to the corner of West 37th Street, you're going to see an amazing, amazing view of the Empire State Building. Yeah, Gopher Hokies is asking about oil. Well, I mean, what do you think? If you had to make a directional bet, do you think that crude oil is going to go back over $100 a barrel? I don't think so. I don't know. That's just me. I really don't think so. Right now, obviously trading has closed for the week. I believe crude oil closed right at $88 a barrel. Hey, Hawaii is joining us. What's up? Good to see you, Hawaii. All right, what do you guys think about this gorgeous view of the Empire State Building here on the corner of East 37th Street and 5th? It's fantastic. Beautiful view. Juan says, I think crude goes above 100 just because of the problems going on in the Middle East. Maybe. But that's sort of something that everybody knows, right? That's sort of like an event that is so widely watched. Maybe you're right. Will says 2 wars in Saudi are restricting supplies, so it may go above $100. Perhaps. I'm still sticking to my bet that it stays below 100, but I could be wrong. I'm wrong a lot. Could be wrong. I mean, it's definitely a possibility, but I really don't think so. Yeah, Linda says it looks very ominous, right? Kind of looks like you're in a Batman movie. Well, here's the thing. If we just take a step back and think about what went on last week and this week, we've really been through the thick of corporate earnings, right? I would say we're in the thick of earnings season. And one of the biggest commonalities that we've seen so far, particularly with banks and financial stocks, particularly the credit card issuers, is that even though consumer spending appears to be robust, right? If you look at American Express that they reported before the bell today, spending amongst millennials and Gen Z was up 18% year over year. However, also default rates for 30, 60, and 90-day delinquencies on credit cards are also trending back towards pre-pandemic levels. And this isn't just American Express. This is every single major credit card issuer and major bank on the street. We've been following this. We've been doing a deep dive on this every single day, right? Bank of America said the same thing. JP Morgan Chase said the same thing. Discover Financial said the same thing. Citi said the same thing. And now today, we get confirmation from American Express that guess what? You guessed it. Delinquencies and defaults are rising back towards pre-pandemic levels. So if that trend continues, that should signal a recession. And in a recession, there's probably not going to be too much demand for crude oil. So maybe the market is sort of forecasting, usually we could use the price of crude oil in and of itself as a leading economic indicator. Additionally, aside from the United States, you have to think about China. They are a major consumer of crude oil. And guess what? They are going through a monumental housing crisis calamity, particularly in the commercial real estate sector. Next Thursday, after the market closes, that is going to be a major segment in my research piece that I'm going to publish and send out to everybody on Thursday after the market closes. Exactly what's going on with the Chinese commercial paper market. I don't think a lot of people are talking about it. I think people need to pay attention to it. So we will do an in-depth deep dive analysis of that. So if you want to read that, all you have to do is scan the QR code on your screen, and it'll take you to our free Walks in Wall Street Substack Behind the Street newsletter. And you could read our most recent research piece that we published last Thursday. So next week, on Thursday after the bell, you could read the second edition. And we're going to cover a lot, particularly everything that happened this week during earnings season, and then a little bit of a dabble into the Chinese commercial paper market. So you do not want to miss that. So let me know if the QR code works, and you're more than welcome to punch in your email, and you'll receive that every other week from me for free. This is the Empire State Building. This is probably one of my favorite shots of the Empire. As we make our way down to Koreatown, 32nd Street, you're going to see an even better view of the Empire State Building. Our piece is, Tom, do you still need the umbrella? Let's see. I don't think so. Let's go ahead and close it up. Now, RP, you know what that means? Once we close the umbrella, we have about a 5-minute timer until it starts to downpour. It happens every time. So I won't close up the umbrella totally. I'll keep it readily available unless we have to bang it open again. Oh, Deborah S. Hilarious. I didn't think about that. So Deborah S. is scanning it with my phone. I'm watching it on the phone. You know what? Here's something funny, and this is something interesting. So I look in the analytics page on the YouTube channel, and it says over 40% of the viewers watch Walks in Wall Street on the TV. So I apologize for the other 70%. 60%, excuse me. Yeah, so if you type, Deborah, if you type !news, NEWS in the chat, then the Nightbot will drop the link, and you can just click the link. Ooh, okay. I'm seeing a lot of comments about student loans. I think we should talk about that, because that actually came up. I was listening to the conference call, the American Express conference call this morning, and that actually came up. And the reason why it came up, I forget who the analyst who was asking the question. It may have been an analyst from Jefferies. Because again, if we review one of the main metrics on American Express's earnings report, they said specifically that their strongest product growth came from millennials and Gen Zs. Spending on American Express cards between millennials and Gen Z on a year-over-year basis was up 18%. So an analyst comes on the conference call and they say, hey, that's really good news. You're driving a lot of revenue with millennials and Gen Zs, but that is the majority of the population in the United States that have exposure to student loans. And guess what? Apparently, student loan payments resumed in October. So the question was, do you see that impacting consumer spending in the millennial and Gen Z cohorts? I don't know. So far it hasn't, but that's only been 1 month of data, right? Maybe as we make our way through the holidays and then into January, February, we'll probably see a big decline. But what do you guys think? Do you think we're probably going to see a major reduction in consumer spending because people now are forced to pay their student loans again? I'm not too sure. I don't know. I don't have student loans. I know some people who do have student loans, unfortunately, and it's a massive, massive burden. But maybe it's better to get some of the anecdotal data in the chat. What do you guys think? Western Mass Dave says, Tom, it's going to be way too soon to tell in my opinion. Go for Hokie says, Tom, it will definitely impact. I wonder how many will defer their loans. Connie, good to see you. Zozo Bob says, my sister is freaking out, starting to repay her student loans again. Wow. Hey, Jimmy Anderson, what's up? Thanks for watching, Jimmy. All right, let me catch up on some of the chats. Sharon says, I know Ticketmaster only allows American Express for pre-sale tickets. IRL is dead. Says Q3 earnings were already dreadful. With loans returning, Q4 will be even worse. I mean, it's not a bad thesis, right? Now, to your point, I don't think we could say all Q3 earnings were dreadful because we're just scratching the surface in earnings season, but you're generally right. I mean, Tesla was a train wreck, horrible, egregious, just such disappointing earnings from Tesla. I mean, talk about a barbaric hammering of their operating margin, single-digit operating margin down from double-digit. So I don't think you're wrong. But also, I mean, look on the other hand, right? We also had Netflix reported earnings earlier this week. And they actually reported a really good quarter. Subscriber growth was back on track. Profitability was really good. And this is all after they implemented essentially a ban of the password sharing. Does anybody remember that? So last quarter, we did a deep dive into Netflix because one of the biggest breaking headlines for Netflix is that they are going to essentially put an end to the password sharing. And many analysts on Wall Street thought that that was going to increase churn in a really, really big way. Subscriber growth was actually pretty healthy. I would say it's actually a pretty good quarter. Hey, T-Cow says universities should be free like the United Arab Emirates. John Casey says, do people notice you walking with the camera? I have no idea. I don't really even pay attention to the people around me. RPT says, isn't this the best time to invest in Tesla? I have no idea. I can't advise on that. Maybe it is, maybe it isn't. I'll ask you that question. Do you think now is the best time to invest in Tesla? And if so, feel free to lay out your thesis in the chat. We would all love to read it. I would like to read it. Now, tying this in with inflation, does anybody know what Netflix announced on their earnings report? They announced that they're raising prices again. And this is a common trend across corporate America. Chipotle raised prices 4 times in a row this year. 4 times in 1 year. Netflix is raising prices. It seems like everybody's raising prices. So between your point of student loans coming back into play and prices going up for pretty much everything, when do consumers throw in the towel? When do consumers say enough is enough? Who knows? Hey, Troy Atman, good to see you, Troy. Guys, this is the new ultra skinny and luxury apartment building that is going to be blocking the beautiful view of the Empire State Building, unfortunately. So if you stand at Madison Square Park, unfortunately, the Empire State Building is going to be totally blocked out because of this guy right here. I know, TK Porsches, can that building get any thinner? But if you guys are enjoying the live stream so far tonight, please click the like button and consider subscribing to the channel if you're new. We usually do these streams around really every day, starting at 8:30. So if you're new, click the subscribe button. Join us. Panda Express, there should be zoning restrictions to prevent blocking key buildings. Well, I actually kind of agree with you, but I also, not to sound like I'm contradicting myself, I also kind of disagree for one reason alone. Every time New York City or the government, right, the local municipalities here, try to enact rules and regulations to try to make it better for the public, it winds up doing the absolute opposite. And we have a severe inventory crisis here in New York City. There's not much inventory, and we need more inventory and more supply on the market. So if we continue to restrict building and development of new buildings in the city, the affordability crisis is only going to get worse and worse, unfortunately. But that's kind of what we got to deal with here in New York. Hey, SBK Pilots, his Netflix price hike is almost 10%, which is 2.5 times CPI. This is price gouging. Maybe it is, but also consider what's going on, right? And I'm not just trying to take the other side of everybody's comment to sound combative. I'm trying to do it as like a discussion to give both sides, because I actually may agree with you, but I'm just trying to give both sides of the argument so the viewers can sort of make their decision. Now, what I would do is go to Netflix Investor Relations YouTube channel, and on the Investor Relations YouTube channel, you could watch the full earnings conference call for free with Netflix CEO and their CFO. And does anybody want to take a guess at one of the major topics of discussion on Netflix's earnings call? I think many of you may get it right. If you didn't have time to join the call, it's no big deal. But you know, it is the weekend, so you do have time to go back and listen. And that was a significant justification for the price hike. TK Porsche says it seems that companies are testing out how far they can go with the price increases. So far, these increases are sticking. Yeah, I would say so. So if you don't know, it was the strike. The Screenwriters or the Screen Actors Guild strike? SAG or something like that. I'm not following it too much, but that is impacting Netflix in a big way. So as they think about their content pipeline, right, thinking out 3, 4, 5 years down the road in content pipeline, there's probably going to be a little bit of a lag there, right? Because everybody's on strike. Yeah, Sharon, you're right. The SAG screenwriters. Hey, Bradley says production costs were down because of the strike. Yeah, exactly. So think about, like, when you're running a business, and particularly when you're an investor, I'll say it and then I'll sort of walk back my statement just to make a point. You don't care about what the company did this quarter. I'm not going to buy the stock because of what Netflix produced last quarter. It's irrelevant to me. Well, it's not irrelevant, but you kind of understand what I mean. If I'm going to buy the stock today, I'm interested in how am I going to get my money back in 5 years, right? What is the compounded annualized growth rate, or the CAGR, of its earnings or its EPS going out 5 years? I don't give a shit what they did this quarter. So when I listened to the earnings call, how I interpreted that was, yeah, costs were down because everybody's on strike, but think about our main business model at Netflix. It's churning out more content. And if everybody's on strike now, guess what? That means there's no content being made. So I have to think about, 2 or 3 years down the road, so there's probably going to be a big content gap. So their justification is, look, if we can raise the pricing, we can pay people more, we can get content out faster to market, and also you have all these competitors, right? You're competing for these shows, you're competing for the biggest and best actors. So that's sort of their side of the argument, is let's look out at what our content strategy looks like over the next 2 or 3 years. And this strike is really putting a wrench in that. It's definitely a very, very good conversation to have. It's interesting. But it does suck for all of the employees, right? All of the union members that are on strike, not getting paid. I think there needs to be a resolution to that immediately. Because to your point, there's been many commenters saying, look, you keep raising the prices, you could pay these union employees more, right? You could pay them a living wage, you could pay them a fair wage. You're increasing the prices, you're reporting good earnings. What's fair is fair, right? Bring your best offer to the bargaining table. All right, this is 23rd Street. You can get the R and the W trains uptown or downtown. And I think we're making good time. All right, let me catch up on some of the chats. We just have to make it to Wegmans before the battery dies. Yeah, Go for Hokies says Paramount also seems to be really gaining ground. I think there's just so much competition, right? There's just so much competition out there. It seems like there's 80 million streaming services. Let's try to name all the streaming services in the chat. What is it? Netflix, Hulu, Paramount Plus. What's another one? Disney. Doesn't Disney have one? Disney Plus. Mara says, hey Tom, what's the closest train to Central Park? I'm coming from New Haven, Connecticut tomorrow. Hey, very cool. So I'm assuming you're going to take the Metro North, right, down to Grand Central Station, and then you could just take the 6 train up to 59th Street and walk over if you want. Oh, Action Kid, you're right. YouTube TV is one. Amazon Prime, Hawaii, you're right. Dave's is Sling TV. Apple has their own streaming service now, HBO Max. Western Mass Dave's is MGM Plus. Brian M's is HBO Max. Man, I didn't even think of those. Jay says Tubi. Roku, yeah, I don't think I mentioned Roku. DC322. Mark T says Pluto TV. So, I mean, think about all of that competition right there. It's almost really, really crazy. So not only is the competition so fierce, the competition for talent is going to be even more fierce. Oh, Brenton says Peacock TV. That's another one. Now, isn't Peacock very heavy on sports, I think? So this is the unfortunate events we have going on. This building has totally obstructed, unfortunately, the Empire State Building. No more view of the Empire here, which kind of stinks. Fascinating says, what's the closest subway to Wegmans? I think it's the 6 train. It's right there at Astor Place. I think Wegmans is closed now. What is it, 10 o'clock already? DC322 says Peacock is heavy on the Universal content. Now, I think this is another interesting question. Out of all of the chatters here, Oh, that's right, Hawaii. YouTube has NFL Sunday Ticket. And I believe Apple TV, Apple streaming service, made a big deal with the Major League Soccer. And Leo Messi, I think, is going to get a cut of every single subscription to the MLS Direct Kick or whatever it's called. That's an incredible deal for Messi. Now, according to the Wall Street Journal, the average family in the United States subscribes to 3 streaming services. Out of everybody in the chat here, what streaming services do you guys subscribe to? Would you say you subscribe to more than 3 or less than 3? Hey, Terry Wells, this time would you suggest the Marriott in New York City? Yes, but I think there's better options. In my personal opinion, I think there's much better options out there. It depends on what your budget is. If you tell me your budget, I will give you some amazing over-the-top recommendations. Troy Atman says more than 3. Optimus17 says I subscribe to 2 streaming services. Mark T says more than 3. Some people say none. John says Netflix, Paramount, and Disney. TK Porsche says YouTube TV, YouTube Premium, and Amazon Prime. Eric says you can get 3 for 1. Disney, Hulu, and ESPN Plus. Vinny says 5 services. So it actually seems like the Wall Street Journal's reporting is 100% correct. Matt says I subscribe to Sling TV, but I'm looking for a cheaper option. Brenton says 2 regularly, but 75% of what I watch is free YouTube videos. So just ad-supported YouTube, so not the YouTube Premium. Wow, yeah, it seems like the vast majority of people subscribe to 3 or more. So if we think about traditional media, right? Remember back in the day we all used to subscribe to cable and it was like $115 for the package. 3 streaming services is still just below that, right? Maybe $60 if you subscribe to 3 streaming services, 20, 40, 60, something like that. What's the most expensive one? HBO Max? Or maybe if you buy like add-ons or something. Office Girl says, then how is it different at cable at that point? Yeah, that was exactly what the article was alleging in the Wall Street Journal. It was a really good article about it. Yeah, Brenton Long says, yeah, ad supported. It's getting to the point where it isn't almost too annoying and I might upgrade YouTube. Yeah, I have ad supported YouTube as well. I don't really notice the advertisements too much, but I get all of the, what I like to call spam advertising, unfortunately. Because the majority of the content that I consume is financial content based. So YouTube automatically feeds me all of the, charlatans. And I'm sure you guys know what I'm talking about. You guys probably get inundated with those advertisements. What's one of them that I can't stand? It's actually nauseating. The guy that's jumping up and down saying, you should invest in tax liens. You must be an idiot if you're not investing in tax liens. It's so easy. The other one, what is the other one I get? Join our students. They always say our students are, I don't know, it's all nonsense, man. They're like, our students are making $1,000 a day in the market. You can too if you take my free training or some shit.
Oh, Bradley says, I just got the tax lien one. Oh, man. You know, I don't want those advertisements to run before the stream.
Yeah. No,
I may have to turn off advertising. I don't want people to click on that stuff.
it's okay.
All right, this will be fun. This is Friday night, so we can go off the rails a little bit. What is the most egregious, most spammy, charlatan YouTube advertisement you've ever gotten? I think the most spammy YouTube advertisement that I've gotten is the new YouTube automation advertisements now. It's this kid, he's like, I am making $20,000 a month on a faceless YouTube automation channel or something. I think that's the most cringy one. But yeah, unfortunately I get hammered with all those. Hey, Latha is joining us. What's up? Good to see you, Latha. Thanks for joining. This is actually a very good Korean restaurant. Very, very good. It's called Barn Jew. Extremely good. Time Travelers is the Medicare Advantage Plus plans. I haven't gotten that one. All right, 14th Street, Union Square. Some of these penthouses overlooking Union Square Park are really, really stunning. I don't know if I'd ever want to live right on Union Square Park though. For those of you who joined our earlier stream this afternoon, right at Sutton Place, wow. I'm so glad we did that live stream earlier. The townhouses and co-ops that are bordering the East River, I mean, those are really, really stunning. Extremely stunning. You know, the ceiling heights are probably 10 feet plus in this one. Terry Wells says, I want to live at 432 Park. I mean, you have really breathtaking views from 432 Park. I agree. Who knows, maybe one day you'll do it. I'm sure you will. You got to check out the pool at 432 Park Avenue. It's insane. Very, very cool. And it's a saltwater pool as well. All right, we're going to take a detour down Broadway. I think that's probably the fastest way. Or maybe we'll go over one more. I'm trying to think. Yeah, I believe if we make a right here. Yeah. Oh, yikes. That guy took a crazy spill. I was actually just about to say that. When it's raining here in the park, you guys have to be super careful of the grates. You see these subway grates here? It's like black ice. It's crazy slippery. Yeah, Troy Atman's like he's going way too fast for that thing. I'll give you guys a tip. Never skateboard in the city when it rains, especially if you have skate park wheels. It's impossible. Hey, Michelle, thank you so much for your $5 donation. I appreciate it very much. Thank you so much. Hope you have a fantastic weekend. This is East 13th Street. We are headed down towards the campus of New York University. Since we have the light, we'll make a left on East 13th. We'll go past H Mart, might as well. And they're ripping up all the roads too. They're going to repave everything. This is heading towards the St. Mark's Place area. If we make a right on 4th Avenue and continue down. Troy, this is Tom. Do you think Tesla rebounds this week? I don't know. You know, I posted something on my Twitter. I posted a 10-week moving average of new highs versus new lows on the NASDAQ. And it is really, really eye-opening. If you go to Twitter or X, the new company is called X. You type in Walks Wall Street, you can see the infographic I pulled from MarketSmith. I think it's like 204 to 46, or excuse me, 216 to 46. NASDAQ stocks making new lows to making new highs. That is really, really, really poor breadth of the market. But then again, that's usually where you tend to find at least some short-term bounce. I know someone says finally it stopped raining. It's been raining all day. Apparently it's rained for 7 straight weekends here in New York. RPTs, has ever visit Albany? I think I've driven through it once. Now, besides New York City, if you had to ask me what my favorite place is in the state of New York, it's a tie between 2 places. I would say number 1, well, yeah, it's a tie for 1. It's a tie for number 1. Ithaca, New York, particularly right on the campus of Cornell University. So I would say Cornell, Ithaca, College Town, things like that. And then way, way upstate in a place called Skaneateles, New York, right on the Finger Lakes. Well, one of the Finger Lakes, Skaneateles. That is a really, really beautiful place in New York. And It has very, very fertile farmland and extremely clean drinking water. So if I had to make a bet, I think the land in and around Skaneateles, New York is going to continue to get more expensive and more expensive and more expensive. If I had the money, I'd probably buy a place up there. Hey, Daryl, what's up? Daryl is joining us from Chicago. Bradley says the Adirondack Mountains are beautiful. They are. They're amazing. But if you haven't, has anybody in the chat ever been to Skaneateles, New York? It's unbelievable. It's an unbelievable place. All right, so we finally made it. We were very resolute in our efforts here. But we've made it to Wegmans. This is the old Kmart. I think they're just closing up. Oh, Lake George is nice too. Patricia Ivory says all New York has really clean drinking water. Alrighty here, guys. So hours of operation, Sunday 7 a.m. to 10 p.m. Looks nice. Now, Wegmans has the best prepared food. Fantastic. Elizabeth Gill says the Thousand Islands location in New York is beautiful as well. I don't think I've ever been. I heard a lot of people talking about it, Thousand Islands, but never been. Vinny, Saratoga. You know, not a lot of people understand just how big the state of New York is. They think New York is New York City and Times Square. It's such a huge state with so much to offer. I mean, you have Niagara Falls all the way up on the border of Canada, right? Buffalo and all the way up there, Toronto. You have the Finger Lakes. I mean, it's just a massive, massive place. All right, so here we are at Astor Place. You can get the green train line down. Oh, Joe Ratz, a Saratoga Springs resident, checking in. Very nice. Yeah, we're just talking about all the great places in New York State that aren't New York City. Look, if you rent a car in New York, or in Manhattan, right, and you want to take a little bit of a trip upstate, if you want to go to Ithaca, something like that, it's like a 2-hour drive, maybe 2.5-hour drive. It's not bad at all. I think Facebook is on the second floor here. Juan Fernandez says, Tom, do you watch Billions? I've never watched an episode of Billions. Hey, Victor says, hey, from Miami, I'll be in New York soon. Awesome, Victor. I love Miami too. I was just there. Beacon, New York, Rhinebeck, New York. Yes. Yeah, you know, even Scarsdale, New York is really beautiful as well. Hey, Angelina, good to see you. Thanks for joining us. Let's head down to SoHo. We haven't been to SoHo on the stream in a long, long time. Hey, Jeff in Southern Tier, New York. Good to see you. Yeah, I mean, if you look at the existing home sales report that was released by the National Association of Realtors, every single sector, home sales declined except for the Northeast. Home sales in the Northeast were actually up in September. I did. Someone says, Tom, did you get all your work done after the earlier stream? I did. It was a little bit down to the wire, but I got it done. Tomorrow's actually going to be a pretty light day, but Sunday is going to be probably the busiest day of the week for me. Hey, Herb says, Tom, I went to NYU for 2 years. Love that. Yeah, NYU is just off to the right here. Maybe we'll have enough time to go to MacDougal Street, Washington Square Park. This is a really good coffee shop across the street. La Colombe, very good. Right on Lafayette. Angelina says, how bad is the crime in Midtown? I think it's pretty isolated, to be honest. Midtown Manhattan, especially during the day, is pretty safe. You'll probably be fine. I mean, more like a 99.9999% chance you'll be absolutely fine. That's where all the offices are. Everybody's, working. Here's the thing. The only thing you got to do is just be vigilant when you're taking public transportation. But that's just common sense stuff, right? You got to have a head on the swivel. The crime is getting worse, but I don't think it's as sensationalized as the media makes it out to be. Many of the crime that I've noticed, that I've witnessed, is like homeless on homeless crime. Like that I've witnessed with my own eyes. Because you got to understand, I think I'm out in the city, like walking the streets of Manhattan, way more than the average New Yorker, right? From 8 o'clock in the morning to literally almost midnight, I'm out in the streets of New York doing things. And whenever I see crime, it's like fights, like infighting between homeless people, which is horrible, right? That should never happen. And I have extreme sympathy for that. But, very, very, very seldom do I ever see, unless it's like shoplifting, I see that a lot. Like I'll be online at the CVS, after the stream, just picking up a few things before I go home. And people will just walk in, just rip stuff off the shelf and walk out. But, generally speaking, you'll be all right. Like, in Midtown Manhattan, yeah, you will be more than okay. You also have to understand, everybody, the NYPD is as big as some armies. I think there's like 40,000 police officers. So they cover a lot of ground, particularly in Midtown Manhattan, where everybody, is working. Yeah, Stephen Bates is always fights on the street between homeless people where I live as well. That's what I see a lot of, but particularly at night, like late at night, 11 o'clock on, you'll see like bickering disputes, and it's probably over drugs, right? It's probably over like heroin, things like that. It's really sad. It's heartbreaking to see. Yeah, the Wizards' New York City looks better after the rain. It really does. It looks so much cleaner after the rain. You're right. Now, on the corner of Bleecker Street, this is my all-time favorite. Not even a competition. The best coffee shop in the entire city. Just off to the right, or the left. This place. Boom. This place is amazing. If you're visiting the city, you got to go to this place called Gasoline Alley Coffee, but it's pretty small, so there's not a lot of room to sit down in here. But in my view, this is the best place here. Michelle says, what is the most expensive building to live in? I think it's a particular building on Park Avenue, or just all the Billionaires Row buildings. So Central Park Tower, 220 Central Park South, 432 Park Avenue. But there is one building that is on Park, I just forget the name of it, but it's one of the most exclusive addresses in the world. I would also throw 15 Central Park West in there. I think 15 Central Park West is probably one of the most prestigious buildings. Teresa says, what do you usually order from there? It's a good question. So I either get cold brew with half and half, or I get a double shot of espresso from this place, depending on, depending on the day. Yeah, I heard that too. Elizabeth says Rite Aid declared Chapter 11 bankruptcy. I wonder if CVS will acquire it. I don't think CVS needs to. I mean, maybe they will, but do you think CVS needs to acquire Rite Aid? I don't know. This is a beautiful building across the street. Western Mass Dave's is what I have for dinner. I went to a place called Dig In. Has anybody been to that place? The way I can describe Dig In, it's a healthier version of Chipotle. Maybe a little less sodium, I would say. But it's pretty good. Now, again, like I said before, I've noticed, as with everything, prices have gone up astronomically. I remember during my lunch break, I used to go to Dig In and get a bowl for like $11. Now it's like $16.50 with the tax. Everything's about $4 more now. This is Crosby Street. You'll notice a lot of the beautiful Belgian block streets.
Thank you.
Wow. Your Taco Bell order was $20 the other day? That's just ridiculous. I mean, if you go into a junk fast food place like that, and now your orders are $20, there's just really no point in going to them anymore. It's crazy. So right at Madison Square Park, there is a really, really good dim sum place. It's called Dim Sum Sam. And I used to go there I still go there all the time. And the lunch special used to be $13.95. Now it's $17.95. So again, a $4 difference. Now I know it seems a little bit trivial, like, boo-hoo, cry me a river, but it makes a difference. You know, for a $4 difference is a big, big difference. You know what, let's go all the way down to Canal Street. We haven't been here in a long time. But look, the data shows, right, we got the CPI numbers out, and food inflation still continues to be very elevated, particularly food away from home and food at home. I mean, do you guys notice the same thing? We had this conversation before, but like when you go out to eat at a restaurant or at like a QSR restaurant, have you noticed like the prices over the last 2 years, everything is up like $4? Like if a meal used to cost you $15, now it's like $19. Everything's up about $4. Diane says lunch anywhere now is $20. Spencer says, oh yes, Tom, prices are up, up, up. Someone says it sounds like a New York thing. Maybe it is. Maybe it is. Go for Hokies says oat milk has come down. Well, that's good news. I'm actually getting a little bit warm. I have to unzip my jacket. It's getting a little bit hot out. Juan Fernandez says no way, it's happening in Miami here as well. Abdullah says yes, Tom, prices are going up. The Wizards says food, housing, and entertainment have all gone up about the same percentage. Track says if you DoorDash anything, it's $20 plus. Oh yeah, I mean, I don't even know how people do the Uber Eats and DoorDash anymore, because even if you order a little teeny thing, with the delivery fee and the tip, you're gonna spend like $25. If you wanna actually get a real meal that you're gonna feel full, you're gonna spend like 35 to 40 bucks if you buy something on DoorDash. Hey, someone says aloha from Maui. Hey, Hawaii, we have another Hawaii special in the chat. Very cool. I would love to visit Maui. D says I hardly ever eat out. Now, for some comparative analysis, whenever I'm in Miami and I go food shopping, particularly for steaks, and not only do I notice the cost of a New York strip steak has gone up at least 25%, I've noticed the quality is about 25% worse And I think we've talked about this, and I was looking into it, and I actually was reading some articles that, yeah, the quality of the meat over the last 8 months has actually noticeably gone down for a multitude of reasons. But according to the, I don't know if it's USDA or FD, I forget. They said it's due to stress of the cattle because of the wildfire smoke. Now again, I don't know if that's, I'm not an expert in this, but I read an article that said that. Supposedly, if the cattle is very, very stressed, the meat can be a little bit more gamey, I guess. That's why if you have very, very low stress, the quality of the meat is better. Yeah, TK Porsche says that's a reach. It probably is. When I read it, I'm like, yeah, it's probably a big reach as well. I don't know, but I've honestly noticed the quality is not good. Ronald Weathers has learned to cook. I cook when I'm in Miami. But in New York, it's very, very difficult to cook in a city like New York. Particularly if, you're a working professional and, you're in the office till 9 p.m., you're buzzing around the meetings, and you get home at midnight. A lot of times you're either going out to eat with clients or friends or something like that. New York is a very different city, and I think unless you live in New York City, you don't really get it, which I totally understand. But I think the New Yorkers who are in the chat kind of get it. They kind of get it a little bit. Like when I'm at my place in Florida, I cook at home all the time. But New York, it's such chaos here that it's almost impossible to cook. I don't know what it is. Hood Patriots is fake news. Just eat organic, pasture-raised, grass-fed. That is the top tier beef. Let me take a screenshot of that because I will buy that. Now, Hood Patriot, I don't skimp out on the steaks though. Oftentimes I go right to the butcher at the Whole Foods and get it. I don't know, maybe it's just like a one-off. Maybe it's a one-off. I don't know. Maybe it's just this past eight months has not been good. I don't know. But I do try to get organic, grass-fed beef. These buildings here in SoHo are amazing. Look at the loft-style apartments. Really, really stunning. Those could be up to 15-foot ceiling heights there. Amazing. But look, I mean, Federal Reserve Chairman Jerome Powell said the same thing yesterday. He's like, we are resolute in getting inflation back down to the 2% target. And he even said himself, he's like, food inflation is too persistent. Shelter inflation is too persistent. We're going to have to continue to tighten monetary policy until we can get inflation back down to 2%. That's what he said. So I think that's what they're going to do. The final thing I'll say on the stream is, we're almost at the end of October here, guys. I know it's crazy to talk about, but it's true. It's October 20th. 10 days and it's Halloween, right? Now, on October 31st to November 1st, that is the next FOMC meeting, which means we are going to get another policy statement from the Federal Reserve. And in my opinion, I think there's a high probability or a high likelihood we may get another 25 basis point rate hike, right? 2 weeks ago, CPI came in hotter than expected, 3.7%. I say if we don't get a rate hike on November 1st, I think we're definitely going to get at least one more before the end of the year. There's only 2 more Fed meetings before the end of the year here, guys. And I'm not buying this narrative that the Fed is going to be forced to pivot and cut interest rates. If the Fed cuts interest rates by Q1, you are going to see the inflation genie absolutely explode out of the bottle. It's going to be 5% CPI, 6% CPI all over again. And I don't think Fed Chair Jerome Powell is going to risk that, right? He even said in his speech yesterday that he would much rather overdo it on the quantitative tightening than prematurely ease economic and monetary conditions in the United States and have inflation rip through the economy again. We just can't afford that, particularly now that we're now wrapped up in two of these major wars, right? Not to get political, but just from an economic standpoint, I think that's something we need to think about, right? Look at the national debt and look at how much it's going to cost to service that debt too. So who knows, guys? Crazy stuff, but I think we'll leave it off at that. I want to thank everybody for coming out and enjoying this beautiful walk in New York City. If you enjoyed it, feel free to leave a like on the video and click the subscribe button if you're new. Once again, if you want to be subscribed to receive all of our equity research for free, every other Thursday after the market closes, I will send you out my research piece that covers US equities, global equities, fixed income, and the real estate market, both residential and commercial. If you scan the QR code, you could read our latest research piece for free. And this way you will always be up to date should you miss a live stream. Not to worry, you can just read the newsletter. And now there is an audio version. So everybody have a fantastic weekend. Be safe, take the time to recharge and relax. And we will see you all tomorrow live from New York. So hang with Mark Mom, I appreciate it. Laytha, Teresa Diaz, Juan Fernandez, Hood Patriot, appreciate it. Joan K, fascinating, all of our fantastic moderators. Madison 32, Western Mass Dave. Have a great weekend, everybody. There's always a bull market somewhere. You just need to know where to look. See you tomorrow. Take care.